Matters East Africa Property Summit, where the government has been urged to enhance efficiency in the property sector to be able to unlock value and investment. Stakeholders in the property sector noted that the government's move to impose a 3% housing levy on Kenyans will only hurt the disposable income of those aimed to benefit from the affordable housing scheme. Jimmy Mbogo now joins us from the summit with more. Over to you, Jimmy. Good afternoon.
Well, thank you very much, Noah, and a very good afternoon to you. Yes, as you rightfully said, this is the East Africa Property Investment Summit. It's a two-day summit that brings together stakeholders from different parts. And of course, as you can hear in the background, there's a lot of noise. We have decided to do this interview during a quick break before we let the panel discussion continue. Now, to be able to help us understand the importance of this 10th summit, I'm joined by, Somaya Joshua, who is the head of commercial property at ABSA. Somaya, thank you so much for speaking to KTN. The conversation around affordable housing is a big one in Kenya, and I'm sure this is something that cuts across Africa. So tell us, what is the ideal outcome for you during this conference?
I think if you go back a year ago, we started what I think was the right conversation, and that is about what are the barriers to produce the right kind of stock. We know that there's pent-up demand in this market. We know that there's an urgency around producing the houses. I think where the market has shifted to now, which is phenomenal, is so what? What do we do now? And when I look at just Nairobi, already we're starting to see the right developers having identified the right locations to put up the right affordable stock and to really start to chip away at that backlog, which is sitting at about 2 million units for now. So it's an exciting story. I think the capital is there. I think banks have really appreciated the focus given to the asset class, and we're really getting our heads around how to support developers, partner them, and put some capital into those financial structures to bring the stock to market.
All right, now the biggest complaint that we've been hearing from developers is the issue of capital. They are saying we cannot be able to access capital. So how do you intend to bridge that gap in terms of capital availability and linking that with the developers?
Okay, so from an ABSA perspective, we've got a very established affordable housing franchise where we've done this kind of thing in various markets on the continent. We will always look at, the property fundamentals, and that is about, do we have the experience in the developer? Is it the right product? Is the market timed accurately? And does the capital structure work out? And what I mean by that is, what's the debt to equity ratio? And for so long as we can figure out that all of those fundamentals stack up and they're solid, we've had a pronounced actual capital allocation, if you want to call it that, to support housing and the development of the housing market. And we will look to put in long-term debt depending on the kinds of product that you're looking for. So we will fund developers to actually deliver the stock, and we'll do that on a cost to complete basis, and we'll do that on a pre-sold model basis. But we also are able to take a view on the rental market, so you can develop and you can decide to hold, and for that, it's a play on cash flow for us.
Now, I want to pull Mark Danford closer to me. Mark, welcome to the set again. And now, when you look at the untapped value of different property assets within the market, how much are we talking about?
Oh, wow, that's a really... I thought we were friends. That's a really tough question to answer. And I think part of the reason is there's an age-old divide between what is value and what is the price of something. Evaluation is an academic exercise, and it's a snapshot in time. So, something might be valued at X today, but given market dynamics within COVID is a great example. You might have something that is producing a good that is highly in demand pre-COVID, or is not in demand pre-COVID, but then is highly in demand post-COVID. So the value of that asset would increase significantly over time. Also, infrastructure unlocks value, right? So as new roads are built, new areas are developed, the value of land in that area can change exponentially over time. If you go back to when Tatu City first began, and I remember when the project was being slated, a lot of people were like, this is a white elephant. Land out here is never going to be worth the kind of values we're talking about. And now, if you look at how many times the initial value that they were bought at or purchased at has increased. It's incredible. So in terms of the total untapped value of assets in Kenya, I mean, it's a vast number. It's very difficult.
Yeah, we have been talking about a 3% levy on to go towards housing. From where you sit, is this the right move?
Look, I think I don't really have a strong feeling about a levy, to be honest with you. I know that the previous 1.5% failed due to the unionization largely. It's capped at 5,000 bob, which for the majority of the market is not a huge amount of money. But obviously it has a big impact on the lower income people who, interestingly, will be the most positively affected by this levy. However, I do think that the problem of, or if it is a problem of a lack of quality affordable housing, is one that should probably be solved more by the private sector with the support of the government rather than expecting the government to solve the problem on their own. So, if this levy is heading the direction of a government solution, I'm not sure that's necessarily the right course. And, we can learn a lot from more developed markets and spend a bit more time with them, understanding how it's important to have affordable housing built into pretty much any housing scheme and in different nodes across the city, rather than building massive affordable housing developments in certain low-cost areas. So the 3%, honestly, I'm not sure how that's going to go. But I think that there is a broader thought piece that needs to happen around what is the actual long-term solution for the affordable housing problem. Yeah.
Thank you for making time for us. Noah, there you have it. Of course, we'll be giving you more details in terms of what happens here, and a lot of conversations are going on around affordable housing and also just towards different asset classes. Now, as it stands, about 3.6 million Kenyans living in Nairobi particularly, a lot of them do not own property but are leasing and renting property, and this is an equation or an imbalance that presents another opportunity. But for now, back to you, Noah. I'll be giving you more details in our subsequent bulletins.
Well, thank you very much, Jim Mbogo. And even we need to have a conversation around the MSME participation in the housing value chain.